Weiss, you've been trading kind of in and out. I don't even want to call it day trading. It's sort of moment by moment trading, really, for you today, because on the lows of Meta, for example, you bought some, but before we even have a chance to really highlight that, you're already out of it.
Actually, I got back in it.
So just take me through. Just take me through the thought process of why you're trading like you are today, so tactically.
Sure. Well, first of all, I came into today short QQQ, short VOO, and short the Russell IWM. And I covered those pretty early, I'd say about 7:30 or so, just because I thought it was so emotional. And when markets trade so emotionally, particularly pre-regular hours, it's generally an opportunity. It could have been wrong. I mean, it could have gone down further, but I just thought, made some good money in it. Didn't offset all the money I've lost, of course, over the last week, but made some good money in it. And then with that as my baseline thought process, I thought it was a good opportunity to buy Meta. I didn't buy it down 40, where it was. I bought it down like 30 and then made some money, sold it, want to take a fresh look, which I like to do, make sure no emotion creeps in on my part, and then sold it. Did the same thing, by the way, with the Qs. I haven't touched the Russell since I covered it. Mm-hmm. The same thing, Qs and VOO, which I'm now long again. I can't guarantee. I put stops in, because obviously I'm occupied here. So I can't tell you that by the end of the show I'd be long. And I can also tell you that this is not for everybody. Okay, I've been in the business for 35 years, so I've seen lots of markets like these. And I'm not buying anything that if I'm completely wrong and it goes south in a hurry, forget about a stop. I'm not comfortable being there for a longer period of time. But I'm not adding new money to it. So I still have what was left of my core position in Meta. If you recall, about a month ago, I shaved my portfolio and sold things like Uber. But look, when there's this emotion, this kind of volatility, not to say you'll always make money, it's still only 60-40 that you will, but I think I can handicap that well on my part. One thing I'd say about what Joe said is that and Shannon, is that this is just a confluence of events all coming together. And what I've been saying about this market for a long time, the economy, is that we're on borrowed time. I said it just last week that at some point, right, the record tightening cycle that we've seen for as long as we've seen it is only delaying the impact. It's only being delayed in terms of the impact on the economy because of a couple things. And I'll be quick because I know you want to move on.
Yeah, I do.
The first is that we have a COVID fire hose of demand that drove the consumer. Consumer is clearly atrophying, as we said, with increasing debt levels, increasing delinquencies. And then you've got a cohort that's invested in the market that's always used to V-shaped recoveries. Now, too early to say this won't be one, but who knows? And then just as far as the VIX goes, I don't buy it as a valid argument. I agree with everything you said, because the VIX for the last year, 90% of the time has been at low double digits. So all of a sudden, this was
right. So everyone's short
going to be,
but everyone's short vol.
Right. But you could have made that case 6 months ago and gotten your head handed to you because the market moved up. So it's a contributing factor. It's not the only factor.
So you